Started now. So, good evening and welcome to Property Pulse. I'm your host, Udodiri Elizabeth Anyaka. Tonight, we are going to continue from the topic that we already know for tonight. And the topic is part two of funding to invest in. So, this is a discussion that we've already had in the past. So tonight we have not just two speakers, but three speakers. So I'm going to give the floor to the speakers so everyone can introduce themselves again for the benefit of those who are, joining to, get listen to the podcast. So I'm going to start with Mr. Akim. Thank you.
Thank you so much, Elizabeth. Thank you for inviting us again. Really, really appreciate it. We see the good work that you're doing. My name is Akim DBC. I run Rakumi and Agile Financial. We've been running it for about 6 years. I am also an executive in IT. So I wear two caps. That's a little about me.
Thank
Not
you.
much to say.
Not much to say, but there is a lot that you have inside of you that you've been dishing out. And so many people, even me, myself, have been benefiting from it. So thank you. Mrs. Abibat, please, can you tell us about you?
Hi, everyone. Good evening, Elizabeth and everyone. And thank you for having us again. Like Mr. Akim said, I'm Abibat and I'm a mortgage broker. I've been in the industry for almost 8 years now. So I help clients who are looking to finance their mortgage. It could be based on residential or on a commercial. So, and to God be the glory. It has been going on well. And thank you once again.
Yes, thank you. Of course, I've been having testimonies from people saying nice things about their mortgage journey, coming to you and even from clients. So thank you for the introduction. Now we have another wonderful personality. Her name is Mrs. Esther. So please, you have the floor.
Hi everyone, my name is Esther Sunday. I'm a real wealth manager. As founder and CEO of Horizon Growth, I've been in this space for the past 10 years. It's actually a decade. It makes me feel old when I say that. So when you think about wealth creation process, the idea of accumulating, growing it, preservation, sustainability, and then transferring it in a tax efficient way is my space. So I talk more about money and compounding. So you can call me a compounding queen if you like, but I'm here to learn and share a few nuggets with my brother and sister to help our audience understand what the podcast is all about.
Awesome. This is beautiful. I'm so excited to have all three great personality here. In fact, I know I'm actually going on a journey right now, and the journey has already started. So we're going to start with our question tonight based on, what we have in terms of the topic. So I'm going to start with Mrs. Habibat. And we'll continue from the discussion from the last time that we didn't finish because it got so interested and we couldn't finish it. So now we want you to tell us what are the key requirements for one to be qualified for mortgage. Some people know about it, but some don't.
Okay.
Yes.
Yeah. Thank you so much, Elizabeth. So the first thing first, if you want to qualify for a mortgage or the requirements needed for a mortgage, the first thing is, are you working? I've seen some people that would just come to me and said, "Oh, my husband is not working, but I'm working, and can I do a mortgage?" You have to be working. At least you may be employed or self-employed. Two things: employed or self-employed. Without that, then because that is the main key of it to get a mortgage. So you have to have two recent pay stubs, your verification of employment, you need your T4, you need your notice of assessment, 2 years of T4, 2 years of notice of assessment, 2 years of T1 general. That is if you're on a self-employed, right? So, and another thing that you, after getting all these documents, right, you want to get something they called pre-approval. Pre-approval will make you to know how much you actually qualify for. You can't just jump one morning and said, oh, because I have my down payment, I believe that I can qualify. So yes, you can qualify. That is if you have the income and if you have the down payment. But at the same time, what would your pre-approval says? Your child benefit is required. Okay, that is another additional income on the mortgage, right? And another thing is, which I usually tell people, is the bank statement. That is the most delicate requirement for qualification. Because I've seen tons and tons and tons of people come in and said, oh, I just brought in the money, huge amount of money into my bank account. And at the end of the day, I want to, because I have 20,000 in my account, I believe that I can do it. Some will tell me, oh, Shebi, it's my money from back home. Yes. No dispute about that. That is not your money. It's actually your money, because that one the 3 month bank statement shows that you are actually ready for the mortgage, because it shows how you've been planning and saving, like AjoPro. I do tell people I've used AjoPro in order to get financing. So people just be like, oh, really? I said, yes. When you know, you know. When you do not know, you do not know. Right? So AjoPro will give us their financial statement. I'll tell them, go get AjoPro statement and bring it down. 3 months. And bring it down and we present it. So bank statement is very important. You know, our people, like I think we talked about it the last time regarding how you put money into your account, the Ajo contribution that we have back in Africa, right? So when you put that money into it, you cannot use it. So those are the requirements. That are you actually ready? Do you have what it takes to be ready for the mortgage financing?
Thank
Right?
you. Thank
Okay.
you.
So,
Now, based on what you just said, two questions popped up.
okay.
Now, you mentioned self-employment. I believe self-employment is for those who has business, right?
Right.
And how can they use their business for mortgage? Because I've had people who has asked me this question. Oh, I'm not working, but I have business. Are you sure they will pre-qualify me? Then another one again, you now talked about pay. You can pay without applying for mortgage. Like if you have the cash, let's say a house of 500,000, can you pay with cash of 500,000 without applying for mortgage? Those are my two questions.
Okay, let me start from the last one. Cash. I've seen a client that has 250,000 mortgage. That's the amount of the mortgage. And he paid outrightly. You do not need to have a financing on the mortgage. There is no need, because you're paying it outrightly.
Outrightly.
So that is just the case. And when you're now talking about the self-employed, self-employment, you have to be 2 years on that job.
Ooh,
You will have filed 2 taxes on the job. And what do we consider as the income? You have your gross income of, let's say, 60,000. That is what you make in 2024 and 2025. You made 60,000 in 2024. You make 80,000 in 2025, right? But guess what? They won't use the gross income like we use for employment. They will now ask for your net income. That is where your T1 general comes in. You know what? People will get probably gross income of 60,000. And after the net and expenses, maybe they're into negative. And trust me, can they buy? No. But they'll tell me, oh, my gross is 60. Yes, but you've already expensive. And you put every expenses on it. And at the end of the day, you won't be able to use it. Another thing is, which I see there was a client negative in 2024 and positive in 2025. And we usually use 2 years average of that. So 2025, let's say of 10,000. And you have negative of 20 in 2024, you have maybe 5,000. You know what they would do? 10,000 less the 5,000 divided by 2. So that income that we can only use will be 2,500 because we consider the net and not the gross. So that has to be they need to know that it's the net and not the gross when it comes to self-employed, and it has to be 2 years on it.
Wow. Thank you. Mr. Akim, I have a question for you. Along the line, she talked about Ajo Pro and talked about, how it has, aided people in buying property, more like the financial statement, just like bank in terms of getting 3 months statements. Do you consider Ajo Pro like similar to bank, or like if you can analyze that? Because some people, are stretching it to, in the place of, oh, it's a bank on its own, something like that. So they don't miss the concept of Ajo Pro.
Thank you so much. Okay, I'll answer your question. But I wanted to say the reason why most people who are self-employed, right? People in our community, they are not self-employed because they want to grow into business. They are self-employed because they wanted to use it to net their taxes. So they create businesses with the idea that I'm going to use those businesses to do tax deduction so that I don't pay much taxes. Now, they forget that. Now they want to go and get mortgage, right? So I think that's one of the biggest challenge in the community. I've seen that too. So most people will say, I'm a self-employed, they cannot give me mortgage. What is your gross income? Gross income is 80, but for 3 years you declare 0 because you put all your expenses on it. So it's not going to work. It's penny wise, pound foolish.
I actually love this thing that you just said now, because really many people don't understand that aspect of whatever thing you declare to the government, that is what show. So which means if you're writing 0 and putting lots of expenses, they are recording it in the system that, okay, this person has business, but no income, but lots of expenses. So that means when they want to apply for mortgage, with that tax document they've brought out, it will now review that, okay, you've not been making anything, but you have lots of expenses. I don't know if I'm correct.
Yeah. Now, to answer your question, do we consider Ajo Pro as a bank?
Okay.
The quick answer is no.
Okay.
Ajo Pro is not a bank.
It's not a bank.
We are registered with Bank of Canada as a PSP, Payment Service Provider. Now, what that means under Retail Payment Act is that we can hold funds on behalf of our customers. We can move funds on behalf of our customers. We can transmit funds on behalf of our customers. Notice I always say on behalf.
On behalf. So it's more like an intermediary.
Yeah. So any money that we are holding has to be in a trust account. You see, on behalf of the customer. So at any point in time, the customer can request for that money and say, I need my money. So we don't have a deposit license. There's a difference between when you have a deposit license, which is regulated by OFSI and all those kind of things. It means you can take the money I can take the money, if I have a deposit license, I can take money from Sister Esther and give that money to Sister Bibat. That's what bank can do because they have a deposit license. We don't have a deposit license.
They have a deposit license. Okay.
We have a PSP. registration. What that means is I can take money from Madam Abibat and hold it for Madam Abibat. I can never take that money and give it to Madam Esther.
Oh.
That's the difference.
Okay.
I can take the money and hold it for her on behalf of her.
On behalf
You
of
can
her.
request for that money, I give it back to her. But I cannot take that money and loan that money to Madam Esther,
Okay, I get it.
which bank can do because they have a deposit license.
Mm-hmm. Deposit
Wow.
license.
So what the bank is trying to do is they are trying to say that every single dollar in our hand is safeguarded. You know, the banks, they use CIDC to insure the money they have. So there's an insurance, a deposit insurance that the bank would use to deposit the money that you gave them. So that if anything happens to the banks can now say, okay, I'll give you 100,000 back from your money. For us, we don't have that luxury. We have to protect your money 100%. So the bank would tell us that the only option we have is this money goes into a trust account. It has to sit in that trust account. You cannot use that money for business. You cannot get interest on that money. You cannot take that money and give somebody else. Now the bank is talking about, okay, we can take interest, but the regulation is not firm yet in Canada. So right now, every money anybody gives to us is just sitting there on a bare bone trust account, which means you can request for that money anytime and we can give it to you. So that is just to answer your question. No,
But is that money invested?
Yeah, we are not debt investment. Yeah, so because of that, what we are doing in Agile Pro is we are creating a product around what we do. So, for example, we are issuing what we call our first card service this year, right? So we can create a product intelligently around that. So, for example, you have $10,000 that you are putting down for your school next year or for vacation. We can give you a card and allow you to spend up to 40% of that money. You are the one spending your money, not me. You are spending your money, so that's okay. Now, when you finish spending that, let's say you spend 40% of that money, of course, it's at zero interest. When you are buying those things, you are buying zero interest. So we have given you one benefit. You have a card that gives you zero interest. Okay. Now, let's say in 1 year, you want your $10,000 back, but you spend $4,000 on the card. We can tell you that, do you still want your $10,000 or you want the net $6,000? So if you say, oh, I still want my $10,000 because I want to use it to pay my school fees, or I want to use it for my vacation, we'll give you the $10,000. Then the $4,000 you are owing us, we'll create a new plan for you to continue to pay it. So that's where we make money, because now that is no longer your money. It's now my money that I give you. So we make money from that $4,000 that we gave you. So that is the way we make money from,
Sorry, I just wonder, will the 4,000 now attract interest, or is still 0%?
So the 4,000 would attack charges, not
Okay.
interest. In Agile Pro, we don't charge interest, but we have charges where you take the money. If you take the money early, your charges is more than the person that take it in the middle and the person that take it last. So on that wrong line, the charges reduces as you go. So if you take position number 1, we might charge you, say, $500, $600 on, say, maybe 7,000 or 9,000, whatever, right? If you take position number 10, for example, out of 20, we might charge you, say, maybe $130. If you take position number 18, we might charge you $2. If you take the last position, we will give you maybe $60. You see, because you took the last position, we are paying you more than you put in. So there's a complex algorithm around that, which I'm not going into, right? But that is the way our system works. So essentially, we don't charge interest, but we charge you one-time fee, which does not compound. I mean, Madam Esther knows a lot about compounding. It's a one-time fee that does not compound. So that makes it a very easy way to reduce the cost of borrowing for you. So take a good example. If you take $1,000 in Agile Pro, you will pay $45. If you take the same 1,000 in your credit card and spend it in 1 year, you pay 19%, which is about what? You see, close to
22%.
$200. So that's
Is
the
it 19 or
difference.
22?
That's the difference.
I love this
Okay.
breakdown analysis that you did, because when we talk about Agile Pro to people, they mix it up. So I really like that you break, if like more like you gave a comparison with bank and Agile Pro, so people don't overthink it. Although there will still be some people that will still have some level of confusion. Now, my next question is going to go to Madam Esther. Can you tell us, how does financial advising aid, or the service of financial advising aid in buying of houses? Because I know some people who has come to me and I ask them, "Oh, do you have a financial advisor to help you look into your finances and just see how they can organize it to be able to make the process easy while you are planning to buy a house, even though you've not applied for mortgage." But they're like, "Oh, I don't need that, those people," because what they do is they recruit, they recruit, they recruit, they recruit. I'm like, I think we are misunderstanding the concept of financial advisor. So please educate us on what is the role of a financial advisor.
Mm,
Please.
Broad. Actually, thank you so much for the question. Um, it's a it's very, very broad. It depends with the intentions of
Mhm.
the financial advisor. Again, my brother Kim here is very clear, like what they do with the clients. You may receive clients as a realtor, a mortgage broker, or whatever profession you are. The question now is not about what is my role. The question is what actually is on the table. Are you representing that person's interest, or is your interest first? So, for me to answer that question, I'll tell you, looking at the whole process of buying a house from the many series you guys have done, I know before my sister Habibat gets you to that pre approval, your house has to be in order to save yourself some time and save her time as well. Because as she said, some scenarios here, you have money just popped up in your bank account, and now you want a pre-approval for what? Like they will go back. Like how long has that money been sitting there? It has to be, I believe it's 90 days if I'm not mistaken,
Yeah,
right?
3 months.
How
Yeah.
is your credit score? Like how is your budget? You make 60,000 and then there's this analysis they're giving. You claimed everything to zero, and then you're ready to buy a house. So a financial person who has a client centric approach will be sitting with that client to understand better. So you plan ahead. You try and pull up those goals before the time. You sit ahead of time and say, okay, Esther, I'm going to buy a house in the next 3 years. Okay, so let's see where you are at. Let's start fixing stuff. If you have debt, let's try to fix that. Do you have any savings? You have no job, or this job's income cannot fit into that. Do you have a down payment set? So I'm kind of preparing you for the journey. Instead of me jumping into a bank, they check your credit score, and then people don't even understand the importance of having a broker versus going to the bank. Because now, when you're going to one institution, they say decline. They checked your credit, everything is down. Then you walk to another institution, they do the same thing. So when you're having that person to hold your hand and say, okay, look for a broker, for example, they will do one check. It will help you secure numerous offers, and now you can make a selection. So many people are worried about, oh, I'm going to pay them 1% fee. So what? Who is working for free? Like every service has a price attached to it,
I'm
right?
just
So
loving you right
either
now.
you're paying the broker or indirectly, or you're paying a broker through the bank. Either way, there's a cost to it, right? So the question is now, how best do you position yourself for more option? I like option. I don't want a situation where I get into an institution and I have all these things laid to me and I'm signing up for a contract. Remember, a house is going to take 3/4 of your income, my friend, for the rest of your life, if not 25 years. And some of you are coming to look for a mortgage when you're 50, 60. Can you sign a contract for 30 years amortization, 25 years amortization?
Yep.
Right? 3/4 of your income gone to something you didn't pay attention to plan ahead, to realize what percentage of your paycheck is actually going to go there. Because again, even if you pay the house in the next 5 years, you still have property taxes
Yep.
and bills for the rest of your life. So it's not ended because you paid it off. There's something that will carry along. So having a proper financial structure is very, very important. Otherwise, my brother already said here, the process of deposit, the bank have insurance. Did you hear what he said? The bank have insurance to protect the deposit. And you, with your income that is just naked, going into an investment, if you lose it, 100% is gone. So when you sit down with a financial person, they're trying to help you. Okay, for you to stay in that house, Elizabeth has given you the key. We need to make sure that your income is stable for any eventuality. And I will tell you a very sad story. I just received a phone call yesterday, and somebody was telling me that my friend got wedded 7 months ago, and the husband got electroshock. Like, this electrician, whatever happened, something happened at place where he died. It's very sad. They just got a mortgage. They don't have any personal insurance. Well, that is an accident. If it's related to work, maybe they will pay, but maybe 1 year or 2 years of income. Then what happens to this young girl left behind? New in marriage, only 7 months, with all these liabilities, plus the big wedding they had, they still have some debts to pay on that. So life is just what it happens, and you cannot control what happens. You can only plan ahead, right? So that's why having these structures in place is very important. Having a financial person who actually have your best interest, who has that centric client approach to listen and understand and guide you best on your goal, not tell you what you need to do. No, listen to you and guide you through the process of what your thoughts are. That's what I call a financial advisor. Otherwise, we have so many out here.
A lot.
Anyway, I'm going to testify. I'm actually one of Esther's clients, and it's been a wonderful journey since we started. In fact, we're actually at the point of meeting again. Let's start reviewing my finances and now put some other structures in place, one step at a time. So it's been a wonderful journey working with her. There are some stuff that I didn't understand in terms of certain investment, what they mean, and all of all that stuff, risk, in terms of how much risk I can take. Working with her has actually made me understand a whole lot and become sort of grounded in terms of my own personal finance, and even keeping my own self in check with my debts, with my savings, what I need to invest into, what I don't need, rule them out, impulse shopping, stop, checking all that stuff. So I'm speaking from testimony with working with us. So thank you so much for answering all these questions, because these are important questions that I have gotten feedback from people. Now, the next one I want to go into is mortgage insurance. Madam Abibat, please tell us how important is mortgage insurance, because people don't know how important. You just talked about life insurance, which means if that man had known, or maybe if you had taken that advice, I don't know, I hope that lady is going to be fine, taking care of the finances. So what is the advantage of mortgage insurance? Tell us about it.
Okay, so I know that this question is supposed to be directed to insurance broker, but I will tell you the insurance that I know. But she's the guru, right?
Okay.
I do
Okay.
tell my clients that there's 4 different insurance, and correct me if I'm wrong, Esther. There is CMHC. That's one that you need if you want to get a mortgage. There's nothing you can do. It's hardened already. So far, you are doing below 20% down payment. And that goes to, okay, I'll cite an example. You have a mortgage of 300,000. you are doing 5% down payment. That is 15,000. If you deduct 15,000 from 300,000, the remaining balance is 285. The insurance is going to be based on 285, and it's a 4% of that 285. So the 4% is around maybe 11,600. 11,600 will be added back to 285,000, which means it's going to be 294,600. Mathematician, if I'm right, that insurance, there's no way, because you're doing below 20%, that will be added on top of it. Guess what? Let me shock you. If you're doing 19.99%, they will still charge you 19.99%, they will still charge you, and the charges will be around maybe 4,000 plus. And you just be like, 1% is still charging me this. So anytime you're doing below 20%, we have CMHC, Canada Mortgage Housing Corporation, we have Canada Guarantee, and we have Sagen. Any of that three, it's okay. They do the same job. This, let me just digress a bit. Energy efficiency, that people are like, oh, I want to get money. And I have a client and said, oh, no, it's only CMAT. I said, three of them does it. So far, you are below 20%. So that can do. Then you have your home insurance. Some people will tell me, oh, I have my life insurance. I don't think I need that, like that. I said, home insurance, you won't even be able to sign with your lawyer if you do not have it. Your lawyer would not, you won't. So you need to cover your home insurance. You need a home insurance to cover you from theft, flood, and fire. That one is different from life insurance. So then you go to Sister Esther and said, Esther, I need a life insurance. See, unfortunately, I'm so sorry about that loss. 7 months, and without that, I just reviewed mine. I said, I want this there. I want this there, irrespective of how much I want to pay. Like you said, Esther, intention. I've seen so many insurance license that have just be like, they are just after their pocket, unfortunately. But sometimes they will just be like, who can I trust that will break down? See, Esther is there. Even without saying, will break it down for you. And you'll be able to understand what you're actually going into. That is life insurance. Okay. And then we have another insurance that is actually a mortgage insurance. That insurance is going to be based on your mortgage, life and disability. Bank do sell it. Is it not good? It depends on you, because it's another additional. If you're not able to go to work or things like that, that can cover it. So, oh, Abiba, should I take it? I said, see, it's all about you. It's good to have it. Esther, I believe you'll be able to talk more about that. It's good to have it. Anything that you can have to protect yourself. One, this is a finance world. And two, insurance is like it's a key. I want to protect myself, not just for me, but even for your family. And people would tell me, I don't think I need it. I don't think I want it. I've seen so many people that do not have life insurance. Disability insurance, they will tell me, oh, I don't think I need it. It's just a waste of money. But when it happens, then you know that, oh, it's not actually a waste of money. So those are the four insurance that I know that, yes, it's a must. If you have it's a must. You just have to cover yourself. And without CMHC mortgages, you are not going anywhere. Then I will just tell you, do 20% and you are off it. So if you're doing 20%, it's just 60,000 and less it 240. That is what because you don't need the insurance. You have equity on the insurance already. I think we've lost her. We have equity on the insurance already, on the house already. So there is no point in saying that, oh, I don't need this, I don't need that. You're back?
I'm so sorry. I don't know what happened.
Okay, that's fine.
The recording is still going on. Thank you.
You need insurance.
Oh, we have Brother Kim, the IT guy. He has the vaccine to fix it. You forgot that.
He's a powerful combo. So that is, and I know that Esther can talk more about insurance. that is very essential. So I think I'll pass on to the guru because she's a guru.
The question was yours. It's not about the guru. I think you tackled a lot, and I'm making a lot of notes as well because I'm learning, the 4%, how it's calculated. Because clients come to me asking me, and I have to admit I don't know because that's
Oh,
not my space, and it's always okay to say when you don't know and learn from the right people. So thank you so much for clarifying that. Like it still goes back to the same conversation. Protect your income first. You're giving Brother Kim all those deposits or the holding of your money. Can you imagine a day that 10 of us are looking for our money and he doesn't have it? Then what? He has systems in place to make sure that when Elizabeth says, give it back, he can say, okay, here you go. Because it's not his money, he's holding it on behalf of a client. That's what he said, right? So while he's holding it on behalf of a client, he needs a system of protection, whatever that looks like. So anytime you walk into an institution, the question now becomes, how are you going to pay for what you're signing up for? It's very funny when people come in and they're looking for life insurance, and then the first thing they say, I can't afford it. How about if I can't pay it for the next 3 months? I say, you bought a car, you got yourself MPI insurance. You didn't ask the MPI people, suppose you can't work, how will you drive? You didn't ask them. You went to a BEBAT to sign up for a mortgage, which is going to cost you $3,000 a month. You actually don't know whether 10 days from now you're going to have that job or not. Because whoever feeds you can always starve you. And you have no choice. If they wake up and say, Esther, I don't need you, then what? The mortgage is still looking in your face. So then, as you get that, the insurance is never about replacement of anybody because life insurance doesn't bring anybody back. It just replaces the income, the responsibility that is there. And that's what we're talking about here. So having all those protections in place is very important. Understanding the type of protection you have is very critical, especially when you're signing up this insurance. I've been in a workshop with Brother Kim and he was very specific. Do you know that life insurance can be used as a way of leverage? Some people don't know. But when you talk about those strategies and then they're like, it's expensive. Well, you can go to Dorarama and buy a broom, or you can go to Superstore and buy a broom. They're both brooms. One may be $25, another one is $2. Like when you come and sweep and it breaks, then you'll go 10 times to buy more than the person who bought the first one in Superstore. It's a decision you make. So if you want to make sure you stay in that house, trust me, get the right product for yourself. Read on it, research on it, make sure that it serves you. And when you get it, don't think that I got it 5 years ago, I'm good. No, Habiba, your income changed. Maybe you had another baby, maybe you had another investment, maybe a dynamics change. It's never the same. The last thing you want is you have assets of 2 million and someone gave you a 250,000 coverage and they never came back to you. So then something happened, is like, what will this 250,000 do for me? Right? So that's why I kept saying that you need to have an advisor that have your best interest. How often do you communicate? Or when I make a sale, that's it. You never see me until the next time I want to sell another thing. Right? So those are the things that we need to think about. Whether you're getting mortgage insurance, life insurance, disability. I got hurt at my doorstep. The other time when there was windy, I twisted my leg. I had disability insurance for a long time. I never claimed it. For the first time, they paid me 7,000. But I subscribed a long time ago. I thought disability someone on wheelchair. No, it happened on my driveway. Just the wind. I fell so badly. But I'm not disabled. I'm still working. But because I was injured and I protected myself many years ago, it has stopped up that income that I'm supposed to be doing what I'm supposed to be doing. While I'm productive right now, I may not be 100% productive. That's what I'm saying. Do you have a product that when you claim, they post underwrite you or they underwrite you before? Very important. Very important key things to talk about. So those are topics of another day. But in terms of having a mortgage and buying a home, I will always say, make sure you protect your income. And that income protection comes in a way of rewarding yourself. Pay yourself as much as you can. You love yourself unconditionally. If you can pay hydro, you can pay show, you can pay MPI, you can, all those are people's businesses. How about me who went to do that? What did I pay myself? Right? Because when I can't afford that house and I'm begging someone, I don't know about you guys, three of you. I don't know. Tell me, any of you who has been sick and someone come and say, my brother Akim, you didn't pay your hydro. I have 500 here. E-transfer. Pap. They will come with your loaf rice and everything to help you clean your house. But nobody has enough to pay for another person's bill. So if you know somebody has not enough, why can't you transfer the rest to a third party? Right? So those are just the basic conversation. And I get so attached to that because I've seen so much in the past 10 years and it keeps hounding me. Maybe I needed to enforce more. I needed to push more. I needed to say something and I didn't say. So I will keep saying it. Protect your income. Pay yourself first. If you think you are 1%, pay yourself 1%. If you love yourself to 30%, nobody defines that. Choose the number and just stay consistent. It will compound over a period of time. $1, $2, whatever it is. Just stay consistent. That's all.
That is what they said. Choose you first. Choose you first.
Yeah.
Yeah. I think Mr.
Yeah,
Akim
he's
is
raising
raising
his
up
hands
his
up. Totally enjoying the whole conversation.
I'm so excited that I'm so excited about insurance, and when I hear insurance, it sparks something in me, and I always realize that the reason most people don't do insurance is a mentality that goes back to the difference between an entrepreneur and an employee. It's a mindset thing. For me as an entrepreneur, the first thing I do when I create something of value is I want to protect it. The first thing.
Yeah.
When I create something of value, I think about IP. How do I protect this thing?
Yeah.
So it transcends into our lives. If you're an entrepreneur, the first thing you think about is, I have an income. How do I protect that income? I have an house. How do I protect that house? I have myself. How do I protect myself?
True. Yeah.
Right? So one of the things that I've learned so early in my life is that protection is the only thing you will have when life gets bitter.
I'm telling you. It's true.
That's the only thing you are going to have.
Mm-hmm.
And most people don't worry about that protection. They worry about other things. They worry about the cars, they worry about the houses. They don't know that if that house collapses, you need to pay the house because you borrow the house.
Yeah.
So if anything happens, you need to pay. The bank is not going to tell you that, oh, sorry, your house just caught fire. Oh, we're very sorry for that. That won't happen. The bank will say, sorry, how do we get our money back? So that's why you need to protect that house. The same thing with your life, right? Your kids. Just think about it.
Yeah.
Anybody can die. If I die today, what happens to my son? What happens to my wife? My kids? How do I make sure their education continues? How do I make sure that the current life they have, they can still continue to do it? And you know what? I can do that without much stress. 10% of my income in a year is enough to do that. For some people, they think insurance is 1% for them. In my family, insurance is 10% of our income. We make sure that every year we have that goes into insurance. When people say they are doing insurance, and I'm like, I'm paying 200 in insurance. I'm like, what kind of insurance are you doing? I pay an average of 40,000 in insurance every year. me and my wife. Now, we don't pay those insurance because we are foolish. We pay it because we see it as a source of wealth. Many people don't think about retirement in Canada. The only thing that can make you retire as an immigrant in this Canada is insurance. Just think about it. If you have 40,000 going into insurance every year, and you can access 90% of that, and I think Esther talked about that in one of our seminars. If you can access 90% of that money as a loan, that does not impact the money that is growing, which means
Tax-free, add it.
tax free, and then you can transfer that way. So think about it. In 10 years, if there's no interest, you have $400,000 somewhere. If anybody has $400,000 somewhere amongst us immigrants, that person will not call himself poor. He will say that I have 400,000. So if anything happens, I can pay off my mortgage if I want. If I want to buy a car, 60,000, I will be going to the bank if I have $400,000 kept somewhere. So insurance is a very powerful thing. And I'm glad that both Madam Apibat and then Esther have, branched into it today. It's a very powerful tool for creating wealth. That is the only thing I will add to what they have said.
And it's also a powerful tool for people who are going into real estate investment. I can tell you now, that insurance has brought me to rental properties. So again, it depends. When he says leverage 90%, are you leveraging it 90% to grow assets that pay you passive income? There's different strategies you can use. So while you are doing that, you tell me how long an average Canadian, let me just tell you, an average Canadian, I'm not talking about immigrant, because all of us, we are here. I'm talking now about all of us. Or an average person from North America, how long it will take them to save 400,000 from a paycheck every month. You tell me how long it will take to save that. And then you also change the scenario and tell me how long it will take someone to save 20,000 my sister was talking about in order to get an asset of 300,000. The question now becomes, which part do you want? Do you want to be a saver, or you want to use saving to create assets that compound? You also have a choice.
Thank you
It's
so
yours.
much. I really love all what was said just now. In fact, I'm jumping in my heart. I'm like, God, thank you for this night and all the things I'm actually hearing right now, because this is vital information and the information is so powerful. They say knowledge is power. This is knowledge. This is power on its own. So it's not just to listen to it, but also to utilize it. And one particular proverb that came in my mind is a man who plans for the future is wise. Of course, we know this part in the Bible. So thank you so much for analyzing and breaking this part down. There is one last question I'm going to ask tonight. Then we can now, give our final thoughts regarding today's podcast. And sorry to say, we didn't treat all the questions because the whole thing got so interesting again, as usual. So we may have to come back again for part 3, but it's going to be next month in June, not this month. I'm actually enjoying, not me, I believe people who are listening to it are actually going to benefit from it.
Me, I want a full session of Ajapro.
Okay.
I did that.
Now, the last question says, how does AjoPro support people who may not have strong credit history?
Thank you so much. That's a very, very good question. But think about credit history. Credit history is basically your credit score in Canada. Most immigrants who come to Canada they don't come from places where we use credit history. Maybe when you come from South Africa. Maybe apart from that, even Nigeria, I don't think we have that kind of thing. I don't know now. I left Nigeria maybe 10, 11 years ago. But I know that most people who come, they've not really had that experience because they don't come from a credit environment. They're coming from practically debit environment, right? So when they take that credit, there's a lot of scores and ratings they use to do that. I won't go into that. But essentially, how Ajo Pro helps you to improve that rating is this. For most people, because they come to Canada, they see that they give them credit card, they think it's a free money, they just, spend, and they get themselves deep into debt. For some people, it is what Madam Esther said. You want to buy a car, but you like to shop. So you go to this dealership and ask, and they pull your credits. And you say, I'm not going to buy. I want to go and see if it's cheaper in that place. In Nigeria, we like to try something. Then you go and try the second dealership and say, yeah, how much is your car? They say, I'll come and buy later. They pull your credit there. By the time you go to 3-4 dealership, they've pulled your credit, you are done. So that is the way the credits get bad, right? Now, if your credit is bad, it impacts a lot of things. Even if they are going to give you a loan, they'll give you at higher interest. So where somebody is getting loan at 4%, you might get your own at 6%, right? So how does Ajo Pro help you? Let's assume you have $10,000 or $5,000 or $3,000, in debt that is impacting your credit because you already use your credit card 25% above. That also impacts, right? How do you do that? Let's say you take 10,000 from Ajo Pro or 5,000, and then you pay off your credit card, pay off your credit bills. What do you think happens instantly when that money hits the bank and hits the produce? They see you don't have a debt. What do? They jump your credit up. It shoots up like this thing. So imagine somebody who wants to buy a house, and that person goes to Star Biba, and then she has bad credit because she has bought this car and bought that and bought that and bought that. And I would just say, this thing you have is not going to help you to buy this house because your credit is already bad. What is the quickest way to make that credit bad go away? You start a plan in Ajo Pro. Maybe that plan, maybe you want to use that plan to get maybe the down payment or whatever, right? If you're able to take that money early, you put it in your loan, you clear off that debt, what happens? Your credit jumps up, right? Some people ask me, do you help me to report, my money that I'm paying to Ajo Pro so that I can improve my credit? I say, your credit is not bad because you are not paying money. Your credit is bad because you have debts. So the fastest way is to clear those debts. When you don't have those debts, your credit will jump up. The order of I pay money into Ajo Pro, it improve my credit, that's an extra jara. That's not the main thing. The main thing is, how do you get out of all these debts? 3,000 here, 2,000 here, 5,000 here, this there, this one here. How do you get out of this car loan that is coming? Before your money comes, everything is taken off. How do you get out of that? Right? So Ajo Pro helps people to reduce those things, to improve their credit score by paying off those, high interest loan that is dragging them down. And then they can focus on the next thing that matters in their life.
Wow, this is beautiful. Me, I am also testifying to that. In fact, that was my first encounter with Ajo Pro. I don't know if Madam Esther still remember. The first time I talked about Ajo Pro, I had a debt that was choking me. That when I started real estate. So I now went to Ajo Pro. And that was how I was able to take care of it. And that was how I joined Ajo Pro. So yes, what you said, you are very, very correct, because when I paid that debt, it cleared out from my system. My credit score bumped up immediately.
I don't even know that you are using Ajo Pro.
I do use Ajo Pro.
So you should tell people.
So you are very, very correct. You just analyze what I have actually encountered. So when I tell people use this thing, I don't know how they feel when I say use it. Maybe something, she wants to benefit. I'm not saying because I want to benefit for your own benefits. So I love how you explained it. Hopefully they will get the drill and take advantage. So now I would like everyone to give final thought for tonight, because We're having part three of this. Sorry. We've not touched the selling side and the investment side, which, Madam Esa mentioned about the investment side in real estate. So we need to go to that. People need to know knowledge is power. Thank you. So final thoughts.
Is it just me with the internet? Like, are you breaking or it's just me?
I'm not.
No, she's not.
Maybe it's the internet.
Maybe
Your
your
side
internet.
looks boring, though. I think it's getting
Yeah,
back.
Oh, I think it's.
Yeah, it's better.
I think you're back.
Oh, okay.
Yeah.
Okay.
So I can give my final note is be ready, not just jump into the ocean and believing that, oh, it's going to be very cozy inside the ocean. Be ready and always remember that everything that you needed in life, it's all about planning. And when you plan it right, you see it working right. And like I just want to mention about the credit score thing. If you're paying just the minimum, what is it called, minimum payment, that will not really work on anything. They said you should pay $10 and you're just paying $10 on your credit card. You won't get to where you want to go. And any damage that you do on your credit will stay on your credit for 7 years and it will keep haunting. So let's be mindful of our credit and let's plan and be ready.
Is
And before
everybody
you
still
know
on
it,
the line?
don't be like, oh, because my friend just did it, I want to do it. When your time is right, it will come to places and will fall places. So it's better to plan and to know that at the end of the day, I'm getting the best result of my planning. Yeah.
Awesome. Thank you. So,
I think we just start there.
yeah, Mr. Akim.
That is awesome. So I mean, on a final note, I would say that you plan, you secure, and then you invest. Plan everything you want to achieve. Planning helps you to reduce costs. Planning, if I want to go on a vacation and it's $5,000, if I can afford, if I can afford 500 for 10 months, that would be $5,000. I will not need to pay interest on that. If I have gone to the bank and take a loan or take my credit card to swipe, it is 23%. 23% of 5,000. I have to work to pay that interest. So interest is a way to transfer wealth to other people. So anytime you pay that interest, what you are doing is you are transferring your own future to other people. It's a wealth transfer mechanism. It transfers wealth from you to other people. Now, if you plan, you can solve the problem of interest. Okay. The second thing is you need to secure everything that you do. Secure your life, secure your house, secure your income. Protection is powerful. Insurance is one way to do that. The good thing about insurance is that it not only protects you, it also makes you wealthy. And it helps you to transfer wealth to the next generation. You can see a white woman, she just died, and her grandson just got $3 million. In our community, when people die, we cry because we don't have money to bury them. But in some community, when somebody dies, people are happier because they feel money just got moved to hand. Right? We need to get to that stage where if somebody dies, we know money just moved hand. Right? That is the second piece. The third piece is when you use your planning and your insurance to accumulate wealth, what do you do with this wealth? Put it into something passive, something creative. Use it to buy properties. Talk to your BBAT. Let her plan how you can take those money and put them into something that can begin to bring passive income. And once those passive income begins to be more than your regular income, then it's time for you to relax and focus on those passive income and multiply them. So thank you so much. That is a few things I would say about how we can move, transfer, and secure our wealth across system.
Thank you so much for that, Madam Esther. You need to hear your final thoughts. Then we'll have to come
My
back.
final thoughts have been covered with Brother Kim. Actually, think about a few things. Just the basics. Paying yourself is very important because that becomes a journey for wealth creation. It all starts with you and that paycheck. Someone tells me, "Oh, I don't make enough." I say, if you make $10, if you pay yourself $2 and consistently do $2, it will compound into something. If you can't do it with $10, you'll not do it with $1,000. You'll not do it with 1 million. So you just have to start creating a habit. Number two is the discipline. Everything we do needs discipline and consistency. So think about an athletic who consistently practices. They spend hours in the gym, hours in the practice court, but they just perform a game maybe for 20 minutes. So there's a lot of preparation that goes into planning. Anything that is not planned is actually planned to fail. There's no way around it. So spend some time away from working and sit down with yourself and ask yourself, this 1,000, this 2,000 paycheck, how am I actually going to spend it? And spend some time to direct money because money needs direction. If money lands into your bank account without a direction, it will find something to do definitely. So if you're waiting to get a paycheck on Friday, then you realize that that Friday your transmission broke down, right? So, and you need to pay it. So you'll never be able to do something. Automate, automate, automate. Whatever you're doing. That's why when you sign up for the mortgage, they will ask you to give your bank details. So when you automate things, it comes out without you feeling the pain. All those things are tips that can help you get to where you want to go. And do not try to get into a house that you cannot afford. Even if the bank tells you that you have 600,000 pre-approval, if you don't need to spend 600,000, just take a 300,000 house if that fits your need. Also, when you're signing up for pre-approval, you need to have projected 5 years from now. Is my wife pregnant? Am I just new person? There's no point of buying a 2 bedroom when you know your house is your family is expanding aggressively and you'll need 4 bedroom in the next 2 years. So always, as I said, spend some time to evaluate and talk those goals with someone who is helping you so that you can plan together to get to where you want. But the most important thing is to find an expert in that area. Personally, I don't know much about pre approval. I know enough to guide someone, but I'm not an expert. So, having a mortgage specialist, having a Kim talk to you about a Jabro, having a realtor that can help you understand which area or what you need to be looking for, having an insurance person who can give you guidance based on your needs is very, very important. Having a mentor in life is something that you cannot underestimate. And this becomes mentors that complete your puzzle. Nothing is complete unless every puzzle comes together. I hope we put those puzzles together in this journey of either buying your first home or continuously investing in different properties and understanding what is changing. Because again, it changes every single day. I don't know how many things have changed over the interest in the past 6 months. You know, while you're sitting there thinking that you have an open mortgage and things are happening, or you have a fixed mortgage, you need to be talking to Habeba, like what is happening. And Habeba needs to be sending you newsletters, what is changing, how can you improve. That cultivates a good relationship with your experts because that will help you think about things that you didn't even know and upgrade to situations that will really benefit you. So as you continue listening to this series of podcasts, remember those small tips, and those small tips compound into better things to build your generational wealth that is uninterrupted, tax invisible, that can outlive you. Thank
Thank you.
Thank you so much. Thank you so much for a wonderful time tonight. So we have come to the end of tonight's podcast. So yeah, so thank you so much and have a wonderful night.
Thank you. Thank you, everyone.
Bye.
Bye.